lot. Yeah.
So we've got it. We're ready to go.
All the participants are kicking up, so.
Are we going to wait a minute for the participants?
Yeah, we'll wait just a second here, Brian. We'll let everybody get into our Washington Academy of General Dentistry Stay Home, Stay Healthy CE series. This is actually webinar number 58 since we first started. Hard to believe that we're all back at, well, most of us are back at work here in Washington State. We'd like to thank Benton, Bray, the Dental Accounting Pros, and Helsell Fetterman for tonight's webinar. I will, in a second, introduce Brian Bray, Kevin Bray, and Tyler Opp, and Tyler Jones, and just ask them a few questions that I've been receiving over the last couple of weeks. Well, why don't we do that right now, Brian? Could you talk a little bit about your company? Are you taking new customers, clients? How do you refer to them in the CPA world?
We refer to them as clients.
Okay.
And yes, we are taking on new business. We actually have taken on quite a few new dental clients since COVID hit. A lot of your colleagues kind of ran into a brick wall with the advisors they were working with that kind of wasn't keeping up on this PPP stuff and couldn't give them kind of good advice as to what path to follow.
Okay. So with Dental Accounting Pros and Benton Bray, tell us how those two companies interact.
Sure, definitely. So Benton Bray, PLLC, is the CPA and advisory arm of our two companies. It's the legacy CPA firm that has been working with dentists in the Pacific Northwest for over 30 years. Dental Accounting Pros is what we launched 2 years ago as a national brand to focus purely on the bookkeeping aspect. And we both collaborate. We're a similar team under the same office here in Bellevue, Washington.
Yeah, what we found by accident is that having the bookkeeping team in the same office with our CPA crew there's lots of questions and issues that come up that those bookkeepers are able to go to our CPA team and get immediate answers and guidance. And we just didn't anticipate that. So it's been a huge plus to have that synergy and collaboration.
Oh, terrific. And then
and proud to announce we have dental clients in Washington, Oregon, Idaho, Arizona, and Montana now.
Oh, tremendous. So, and thank you very much for doing these webinars. I know it's taken a lot of preparation and you've really cleared up a lot of questions, and I know you've had to adapt over the weeks. And, you know, we wanted to do this webinar about a week and a half ago, but obviously there wasn't new information. So thank you for waiting and putting this together. Well, I want to also welcome Tyler Jones from Helsell Fetterman. So how do you guys work together with Benton Bray, Dental Accounting Pros? What's the interaction there?
You know, we're separate firms, but I like to just work with the best. Brian and I and Tyler and Kevin, we work closely on a lot of deals, whether it's, you know, existing dental practice that's having some issues with taxes, or practice acquisitions, or structuring legal and business strategies for doctors. So we work closely throughout the year, and it's just a pleasure.
Okay.
And yeah, we have found Tyler Jones to just have a great practical approach to dealing on these transactions. Love working with him on these transactions. We found we make a good team.
And Tyler Jones, thank you very much for the wonderful webinar you did for us. Basically, from a human resources point there, I know a lot of our colleagues have contacted you for putting together HR manuals and that. So thank you very much. And thank you very much to everybody for your support of the Washington Academy of General Dentistry. I'll just thank some other sponsors before we get rolling. Again, this is the Washington Academy of General Dentistry Stay Home, Stay Healthy CE series. This is webinar number 58. As always, your CE credit for these webinars will be coming from the University of Washington School of Dentistry CE department, and we want to thank them for their support. We'd like to thank Comet USA, Patterson Dental, the Arkansas Academy of General Dentistry, the Montana Academy of General Dentistry, Canadian Academy of Restorative Dentistry, and Prosthodontics. Everybody that supported the Washington Academy of General Dentistry, we appreciate it, and we encourage any of you dentists out there that are interested in CE to take a look at the Washington Academy of General Dentistry. We've got some other courses coming up. We've got a course this weekend with Dr. Yassine. You'll see some QR codes there you can use to register. Also, be looking to come back to our website, www.washingtonagd.org. In a few weeks, you're going to see a new website launched with on-demand CE and other webinar offerings. If you missed any webinars over the past weeks, don't forget you can see those at YouTube. Just go to Washington AGD at YouTube, or if you go to our website, just click on that YouTube channel link. With that, I just want to turn over the helm here to Benton Bray and Helsell Fetterman and the Dental Accounting Pros. So thank you, gentlemen. We appreciate it from the Washington Academy of General Dentistry.
Thanks, Dr. S. As soon as we get our share screen going here.
It's looking good on this side.
All righty. So timing-wise, to tell you the truth, this couldn't have been better. If we tried to do this seminar a week ago, week and a half ago, we'd be, we go, well, we don't know, we don't have anything to share with you. But at about 4 o'clock today, 4:30 today, the Senate passed the PPP Flexibility Act that had already been passed by the House. So we had enough time to kind of update our slide deck and our commentary to reflect the PPP Flexibility Act, which fixes most dental office problems with soaking up or spending their PPP money. It's a good day. It's Merry Christmas. It's Christmas early. So, a general disclaimer, this is just information for you to work with. Seek out direct advice from your attorney and CPA. If you're not getting what you need from the attorney CPA you're working with, reach out to us. We're taking on new business. So we last got together here May 13th. SBA and Treasury has continued to issue some ongoing guidance. We've been hearing lots about the nightmare of dealing with the unemployment and employment security department. So we're going to just touch on that. Got a little reminder on tax extension, and then we're going to dive into the whole PPP loan forgiveness. So Tyler, you want to do the rundown on unemployment there?
Sure, and before we get too far into this, I know there's a lot of docs that have attempted to file for unemployment and still haven't been able to receive their funds yet. And unfortunately, you're not alone. And in fact, we just read an article this afternoon where in the state of Washington, they think roughly about 1 in 10 applications for unemployment compensation have been fraudulent. And of the $4.5 billion that has gone out the door, they anticipate that somewhere around $450 million has gone out the door fraudulently. They've recovered about $300 million of it, but there's still another $150 million that's missing as of today.
That's a lot of zeros.
So it's an incredible cluster over there at the ESD. So you're not alone. Unfortunately, you're just going to have to continue to stay patient and stay diligent and follow up with them because they're working through them as quickly as they can. But at the end of the day, even though you're back to work for that time period that you were not able to work, you are still going to qualify for that period. And once they do ultimately get caught up, will get paid and you will be made whole.
Well, and just because your claim wasn't processed and you weren't getting a check, you know, and got your benefits denied, and then got that second screen, the PUA screen, you still should have been going in and completing your weekly reporting. Because without that weekly reporting during those weeks you were shut down, you kind of shooting yourself in the foot. You won't get unemployment benefits for those weeks that you didn't report. So
Brian, do you know, is it possible to still do that?
I think you can go back retroactively. I think.
Because I think that was part of the question, is once people got denied the original benefit, they were either unaware or weren't told that they were supposed to still be filling out those weekly things, because they assumed that, well, maybe it would all get caught up at the same time. But the ESD has clarified that you still were supposed to be filing those weekly claims, and whether or not you can go back and do it, I guess we'll need to find that out.
Sure. The last point here, and I know Tyler Jones brought this up when we talked about this in one of the very early webinars about whether or not the standby unemployment claims would be impacting the business owner's experience rating, which would, you know, jack up your suited tax rate. And it appears it is, based on what I'm hearing from some clients already. Had one client share with me their situation, and their SUTA rate got jacked up about 60%. So ultimately, basically, the business owners are going to be left paying for it going forward. A big chunk of it, yeah, because that increased SUTA rate, I believe it has a carryover tail of about 3 years.
Yeah, the only thing I'd add is I had a hearing 2 days ago or yesterday with the Employment Security Department for a client who had their benefits denied repeatedly. And the person at ESD told me that, you know, their system historically is not really set up for self-employed individuals or business owners to get unemployment. So it's those people, the Schedule C filers, the business owners who are applying for their CARES Act money, that extra $600. Those are the people who the system is struggling to deal with the most. So if that's you, don't get disheartened, keep pushing through. Eventually you will get a backdated check for your first claim, as Brian said, but he gave me some number, which I forget, but by several orders of magnitude, it's the business owners who are having the hardest time getting their unemployment claims through, but don't give up.
Yeah, I think the fraud situation has, I don't know, the impression we have is that ESD has kind of put the brakes on any claim they haven't been able to prove the identity of the recipient. So it's got to go through what they call the adjudication process, and it's ESD employees eyeballing each claim and working through it. So it's extremely slow. Tax extensions, just a quick reminder, July 15th is the due date for tax returns, your personal income tax returns, although you can extend that July 15th date out to October 15th date, but more importantly is the tax payments. We haven't seen any update on this, but your 2019 tax balance owing is due July 15th. The comment on Q1 and Q2 2020 estimated tax payments, most of you are probably used to paying your quarterly tax payments based on what's called the prior year safe harbor method, which is you pay in an amount equal to 110% of your prior tax liability, and that keeps you out of penalty situations. There's a second safe harbor that probably isn't widely known, and that allows taxpayers to pay in at least 90% of their current year ultimate tax liability, and it still keeps you out of penalty situations. Well, with the COVID shutdown, I'm betting for most of you, your 2020 taxable income is going to be down. So you might want to talk to your CPA advisors about doing a, quick kind of tax projection for 2020 to dial back on your quarterly estimated tax payments, because that's cash flow, right? Cash flow is going to be tight. You want to preserve as much cash flow as you can. I guess the other part of that is if you choose not to make your quarterly tax payments, the underpayment penalties are pretty cheap. Works out to about 4% on the amount that you should have paid on an annual basis.
So they call it a penalty, but the reality is it's just interest.
Yeah.
It doesn't increase your chances of being audited or anything like that. It's just the IRS's attempt to not give you the benefit of the time value of money, and so they charge you interest if you don't pay it on time. But it's not truly a penalty. It's just
Right.
interest.
So the other thing on IRA and HSA contributions, if you were distracted with COVID, you know, by the April 15th, the usual deadline for making those payments, whether you filed your return on time or not, just a reminder, those have been extended out to July 15th. And so now that if you're thinking about, well, maybe I should go ahead and make that IRA contribution or, you know, cap out the your HSA contributions, you still have time to do that. PPP loan status. Tyler, you checked the numbers. Don't they still have some money in there?
Yeah, Bloomberg just reported this afternoon that there's still $130 billion still available for funding. So almost half of the second tranche.
So I know there's some for a PPP loan for one reason or another. Maybe they felt that they couldn't get the money spent in that 8-week spending window, you know, while being closed and so forth, or I don't know, for whatever reason. So if you're one of those practice owners, get out there and make that a priority to file for your PPP loan, because you'll see as we get into this, it literally is going to be free money. Here, can you make that go away so I can see it? Okay. PPP loan forgiveness. So the SBA put out their loan forgiveness application and then followed up with additional FAQ guidance regarding loan forgiveness. Here's the breaking news. So when we put this slide deck together yesterday, the PPP Flexibility Act had only, this HR 7010 had only made it through the House, and literally around 4 o'clock we were watching the Senate debate, and actually Mitch McConnell called me. He says, "Hey Bray, is this bill good enough, or do we need to tweak it before we, you know, pass it?" And I said it's good to go, and so they called a vote and unanimously passed it. So all good there. So we do have, it's got to hit the president's desk for signature, but just to give you an idea, it passed the House 417-1, and it passed the Senate unanimously. So I don't think the president is going to veto this.
Agreed.
So let's just kind of, now this slide deck we put together, and maybe we're just going to cruise through it, but we put a lot of words in the slide deck, so it gives you something to refer back to. So let's start with the forgiveness application itself. It's what, 12, 13 pages, all total, and it's kind of all inclusive with instructions, definitions, calculators, and borrower certifications. It's got to be substantially revised. Is that, Tyler, you have a comment?
I was just going to say, it's a coaster now. After today, all the formulas, all that stuff, they no longer make sense. So don't even.
Right. Right. Well, which is bullet point number 2. It's got to be substantially revised with the passage of the PPP Flexibility Act. You know, it's got the basic stuff, your name, address, the amount of loan you got, all that stuff. There's a box to check if your loan was in excess of $2 million. If you recall from our previous webinars, SBA reported that they're going to basically audit all loans over $2 million, and kind of that's the little check the box. Come check me out. Let's have a little powwow around the table, talk about it. I say there's a big part of the application that reports, I call it the hard numbers, because they're the hard to calculate numbers. That's all your payroll costs. And then there's the easy numbers, which are the easy numbers to pull together and report. It goes through the full-time equivalent reduction calculations and the salary wage reduction calculations. And then you recall, prior to the PPP Flexibility Act passing, there was a requirement about the 75% of the forgiveness amount being spent on payroll versus 25% on non-payroll. That has now been revised to a 60-40 split. I read an article that was quoting Senator Rubio that he was basically saying Treasury is going to come out and stipulate that borrowers will have to spend at least 60% of their PPP money on payroll costs, or they will get zero forgiveness. So it's kind of a 60% cliff. Now, for all dental offices, I don't see that being a problem. You're going to be able, especially with a 24-week spending window, you're going to be able to spend probably 100% of your PPP money just on payroll. But that being the case, you got to get to 60% on payroll. That means you get the full 40% balance for non-payroll if you need it to fill the bucket, so to say. It's essentially one big math exercise supported by documentation, a lot of payroll documentation, very similar to what we saw with the PPP loan application process. Instructions and definitions. It confirmed the, call it the 8-week spending window, which now is going to be the 24-week spending window, starts with the funding of your loan. I can't imagine a single dental office that won't be able to spend all their PPP money within 24 weeks. Even if they got it early in the process and were shut down, say 8 weeks, it still gives you 16 weeks to spend mathematically what was 2.5 months or 10 weeks worth of payroll. And then you got your rent on 6 months worth of rent on top of that and utilities. I just can't imagine a single case where the dental office won't be able to convert their PPP loan into being 100% forgivable with one qualification. And that's going to be a focus as we get into this later, and that is the full-time equivalent calculations. If you've had a reduction in full-time equivalents, and that's going to give you a haircut on your forgiveness calculation. Eligible payroll cost. Early on, and even in the application, it refers to qualifying payroll cost. That was kind of all-inclusive. There was no distinction between owner employees or self-employed versus employees, and that changed as SBA issued additional guidance. But again, I don't think it's going to really matter because we've got enough of a spending window here to soak up those reductions for owner employees. Basically, owner employees or self-employed aren't able to include, for the most part, their health insurance benefits and retirement benefits. But you get to include health insurance benefits and retirement benefits for all your non-owner employees.
And so it might have been that the reason that they didn't clarify that stuff earlier is because they knew that these changes were kind of coming down the pipeline. Because it literally made no sense that S-corps versus partnerships versus Schedule Cs would be treated differently, even though they could be doing the exact same business, but yet the qualifying expenses were different. But with this new act that just got signed an hour ago, it's going to probably make all of that moot because you're going to have more than enough expenses to spend it anyway.
Exactly. You know, and you take retirement benefits for owners, you know, a number of practice owners, especially owners who are farther along in their career, have these juiced up retirement plans or a cash balance type retirement plan. We've got one office, the doc put $400,000 in their retirement plan for themselves. Well, if that was taken into account in PPP, it's kind of skewed. But like Tyler says, we really don't think it's going to matter with this expanded 24-week spending window. So we're not gonna dwell on it. Borrower certification. This is basically, cross my heart, swear to die, I'm telling the truth. Used the loan for qualified expenses. I've, complied with all the required calculations. I'm not lying on any of that stuff. I'm providing, true and accurate documentation, blah, blah, blah. You acknowledge that if you are being deceitful or fraudulent, that the government's going to come after you. But, yeah, I know for our clients, those aren't the kind of games our clients play. Those are the kind of games that those stories where the FBI already was going after those fraudsters. Yeah. One of the certifications is basically you're acknowledging and giving the SBA authority to request additional information. So how the forgiveness process is going to work, you work directly with the bank, complete this application, compile the documentation, work directly with the bank. The bank, goes through their checklist. Yeah, everything's good. They send it off to the SBA, and in maybe a rare situation, the SBA may want additional information to resolve a question. We're speculating probably more for those over $2 million loans than others. So really not expecting it for the typical dental office.
Well, and the bank certifications on what's going to be required of the bank is relatively similar to the requirements that they were under when they were calculating the loan amounts in the first place. So the Treasury issued some guidance about a week and a half ago where, again, the banks aren't going to be required to replicate the client's calculations. They can take the documents essentially at face value, and they don't have to double check the math. I'm sure they're going to in a lot of cases, but they're not going to be required to verify every last number that the taxpayers are putting in front of them.
Now, the banks likely will put out some sort of spreadsheet calculator like they did in the loan application process.
It's probably going to be wrong.
Yeah, and actually we were kind of chuckling about it. The AICPA, our National Association, put out a spreadsheet calculator that I think you have to be a PhD physicist to work through.
When all the payroll companies have their own too.
It's crazy complicated, and it's driven by, as you'll see, the calculations required for this forgiveness application. So the very first step one, take a handful of aspirin because your head's going to hurt. There's this kind of the first part. There's, in this forgiveness application, there's what they call a Schedule A, and there's also a Schedule A worksheet. The worksheet is what's used to calculate the employee cash compensation cost. It's done on an employee-by-employee basis. So take a typical dental office, 10, 12 employees or less, very manageable. But how about a business that's got 100, 200, 300 employees? Oh my God, completing this Schedule A worksheet is going to be just a little small nightmare. On this worksheet, you do not include owner employees, self-employed. That's dealt with in a different part of the forgiveness application. Like I said, it's on an employee-by-employee basis. Now, the bullet point there talking about cutoff issues with the initial and final pay periods that straddle both ends of the spending window. Now, if you think about it, you have a payroll that maybe has, on the front side, some payroll days before the funding of your PPP loan, and then some days in that same payroll period after the funding of your PPP loan. The cutoff issue there is you only get to count the days that fall within your spending window. So literally, you have to take that straddling initial payroll period and break it apart and look at pay earned by each employee each day, and then you got to do it again on the backside of your PPP spending window, now 24 weeks. What we were talking about, the 24-week period is so huge that those straddling payroll periods on the front side and back side almost could be ignored. We're speculating can be ignored, and you'll still have enough payroll running through those 24 weeks to completely spend your PPP money. So there might be some practical ways to work through these calculations.
In the rare cases, though, that there are businesses that need those payrolls, the Treasury did clarify that you would get the amounts on the backside that were accrued as long as they're paid by that following pay period, which again, I don't think any of this is going to matter because there's going to be way more than enough payroll to push it. But if you are in a situation where it's close, you do have some flexibility. You don't have to run an off-cycle payroll.
Right. So to say that another way, if you have 3 days of the payroll period that straddles the end of your spending window, 3 days inside your spending window and the rest of that pay period outside, those 3 days count even though they're not paid until the next scheduled payday outside of your spending window. Now, one thing I want to mention, and I hope some of the clients that maybe I misspoke of in the last 10 days, when SBA guidance came out, was it about 10 days ago now?
2 weeks or so, yeah.
And they talked about for the convenience of borrowers, they could defer to the first day of their next pay period to start their 8-week spending window. But that was only with regard to payroll costs, not other costs. That only applies to those borrowers that are on what's called a biweekly pay cycle. In other words, you pay every 2 weeks, 26 times a year. Not borrowers that pay twice a month or pay once a month. You got to be on a biweekly payroll cycle. So I apologize to those folks that I may have misled and said, hey, regardless of what pay cycle you're on, I said, yeah, it looks like you get a start on the beginning of your next pay cycle to pick up some more deferral to basically stretch your spending window. But now with this 24-week spending window, it's a moot point. It's not going to matter. The calculation reduction. So we're going from the basic calculation here, tallying up your total compensation that you paid during your spending window. The next step is you calculate a reduction in forgiveness due to a reduction in salary or hourly wage rates. This was another a little perplexing one that after reading it about 10 times, the light bulb finally went on. Is this reduction in the forgiveness amount due to a reduction in salary, hourly wage rates only applies to those employees on your payroll during your spending window.
So a practical example would be somebody that you were paying and then brought back potentially at a lower rate. So if they were making $100 an hour and now they're making $60 an hour, that's where this potentially comes into play. But it also only applies to employees that make under $100,000. That's where the potential trap is.
Yes, but previously we're looking at the original guidance and we're thinking, okay, if you have 10 employees pre-COVID and 2 of them don't come back and only 8 of them come back, that you might be penalized for those 2, and that's not the case. For this calculation, they're only looking at the employees that actually come back and are paid during that spending window, and then they're looking at your pay rates during your spending window compared to pre-COVID pay rates. Well, I haven't heard from one practice owner who cut their employees' pay rates to bring them back.
Certainly not by more than 25%.
Exactly. So this is probably not going to impact the typical dental office. Now, it might impact a different type of business where it's a hugely struggling business and they get all the employees together and say, hey, the only way we can reopen is if we all take pay cuts and try to muscle through this and survive, like maybe a restaurant. But for typical dental practice, this is not going to apply.
So just to clarify, if you have 10 employees, you go down to 8 employees, purely for the wage reduction component, those 2 aren't going to come back to bite you because they're not included on the payroll. We'll see here in a second where when you're calculating your full-time equivalent, it does come back to bite you, but purely for the wage reduction component, it does not hurt you.
Right. So then the next step after that is calculate your full-time equivalents, your FTEs. And this is, take another handful of aspirin. It's not an easy calculation. I guess an easy calculation is just a voluminous calculation. It's like if you just tackle it one step at a time, you'll get through it. So step 1 is you got to calculate your FTEs during the spending window. And we got an example that we're going to pull this all together after we go through these steps. They give you 2 alternate calculation methods, and for the typical dental office, the simplified method is going to benefit you. Step 2 is you calculate your FTEs during the reference period. Now you get to pick which one of these reference periods works best for you. Notice one looks back to Feb 15 through June 30, 2019 as a reference period, or you can use your January 1, 2020 through Feb 29 reference period. The calculation method you choose in step 1, which likely is going to be the simplified method, you also have to use that same method for step 2. So here's an example of it. We just threw some numbers together here for 5 employees. Total hours worked. Now you'll notice these hours, the average weekly hours, resemble very much what you'll see in the dental office. The Feb 15 through June 30, 2019 reference period versus Jan 1 through Feb 29, 2020. And we've done both calculations. We've done it based on method 1 and then the alternative count. The beauty of the alternative count is you only have to count as a full 1.0 FTE for those employees that work 40 or more hours per week by calculation. So in a dental office where you're working 4 days, and very typically many of your employees are just under 40 hours, they only count as a 0.5. So look at the calculations here. So if you go over to your spending window, the covered period, calculation option 1 would come up with a 4. And then your reference period is 4.1 or 4.6. Well, you can choose 4.1 because that's a better number for you. But 4 divided by 4.1 still gives you a slight haircut on your forgiveness calculation. But if you use the alternative count method, you see 333 across the board. No reduction in FTE, so no haircut in your forgiveness amount. Any comment? Any comment, Tyler Jones?
It's good, except 8 weeks is 24 weeks now. Hallelujah.
Right. Yeah, we put this little example together, obviously, before we got word that the bill actually passed. Step 3, the safe harbor. Now, if you recall from our prior webinars, there was a rehire safe harbor if you restored all your FTEs by June 30, 2020. You got a free get out of jail pass. June 30 has now been moved to December 31, 2020. So for business owners in general, that makes sense. Congress is basically saying, we understand getting back to full steam is going to take some time, so we're going to give you to the end of the year to reopen, build momentum in your business, get your full workforce back, and then we'll look at this safe harbor. The practical calculation is going to be step capital B, looking at your total FTEs in your pay period that included Feb 15, 2020. So essentially your full crew you had pre-COVID, and compare that to your full crew, your full FTE crew at December 31, 2020. I don't know, unless dental offices really fall off, where they've just really sharpened their act on their staff model, which, you know, is not necessarily a bad thing, because coming out of this, if you had some weak players on your team or looked at your staff model and felt like it was bloated and didn't bring everybody back, that's a smart business move, despite how maybe it plays out for your PPP. But as Tyler and I were talking earlier today, this is a loophole you can drive a Mack truck through.
Well, and additionally, too, in the law that just passed here a couple hours ago, there's an additional provision in there as well where this FTE calculation.
Let me flip to that, but talk about the loophole first.
Well, which one? There's so many.
The having your FTEs on that single day.
Oh, yeah. So as long as your FTEs are back on the payroll for that very last pay cycle, either of your 24-week or there at the very end of the year, there's the safe harbor. You don't even have to go through any of this in the first place. They could literally be let go the very next day, according to the statute, and there's no repercussions. So we'll see if whether or not the SBA and the Treasury address that very large looming concern. But as it is right now, that's the way it is.
You could take that dental student, quote, intern, put them on minimum wage to kind of look over your shoulder on exams, and that would count. The other kind of loophole or exemptions is coming up.
Do we have that in the slide?
Yeah.
You made it,
it's
okay.
coming up. Oops, wrong way. So documentation, as we've been saying all along, it's going to be supported by, for the most part, third-party payroll service reports. The forgiveness application does mention bank account statements, but we really think that's going to be for less sophisticated businesses that don't necessarily use the payroll service and they're not as, you know, formally organized like a real business. So it's very much like the loan application process, going to be payroll reports, your payroll tax filings, proof of payment, cancel checks, those kind of things. The FTE calculation is going to be these monster spreadsheets. Non-payroll expenses, same thing, just proof of payment, copy of lease documents, because the qualifying mortgage and lease payments are for mortgage and lease payments that were in effect as of February 15, 2020. And these do apply to not just your office space leases, but equipment leases, or we have some practitioners that are part of what I call the gypsy trade, where they're specialists and they go office to office, and so they have a business vehicle in their company, and that vehicle may be leased, so those lease payments do qualify. But again, all this very well could be a moot point, because if you think you're going to have enough payroll to spend your PPP money. The point, because we've had tons of questions on this, and this started with the banks. When you got your PPP loan, the bank said, well, geez, maybe we should set up a separate bank account and dump this money in there. So we got everyone kind of distracted on this separate bank account notion. I want to emphasize, nowhere in the statute, the SBA guidance, or the loan application instructions does it state or require borrowers to have a separate PPP bank account to pay their qualified PPP expenses. As I've explained to many of our clients, I use the example, your PPP loan funds are like pink dollars or purple dollars, and your regular money in your operating account is like green dollars. I personally think mechanically it's easier just to throw all that money together. And as we've seen, actually in the documentation process, it's you making the assertion that you used your pink or purple dollars to pay PPP qualifying expenses and used your green dollars to pay everything else. I think it's going to be that straightforward, that simple.
In a lot of ways, it's probably going to be easier too, because not having to switch over payroll providers to new bank accounts and new ACHs and all of that stuff. I mean, in a lot of ways, you're just hurting yourself by trying to
Right.
do it out of a new account.
Well, and actually, you talk about that. If you have a separate PPP bank account and hook your payroll to it, you know, whether it's ADP or Paychex or Gusto or whoever, or even Intuit Full Service, those payroll service companies are taking draws out of that account for everything. And included in those draws are some non-qualifying PPP expenses, the employer FICA Medicare taxes, L&I taxes, the payroll service company's fee. Those are non-qualifying PPP expenses. So if you're using that separate bank account as your kind of running ledger, technically you're using some of that money for non-qualified expenses. It's just silliness. So, SBA, Tyler, you got something?
I just wanted to add is probably the number one question I'm getting right now is, hey, I was looking to pay hazard pay or bonuses to people to max out my payroll. I agree 100%. I think after today, that's probably not needed anymore, necessarily to give bonuses or to pay hazard pay. The one thing that I have found and the SBA has alluded to it in some tweets and some other very formal guidances, owners should be reticent to pay themselves hazard pay and bonuses to this time. Again, I think that's totally moot, but there was one audit that was picked up on the East Coast for PPP where the owners were paying themselves some pretty large bonuses. So that's one thing to just keep on your radar.
Well, for your typical dental practice, I can't imagine owners paying themselves less than $100,000 to start with. So
yeah,
they don't need hazard pay or bonuses to get over that $100,000 threshold. Where we have gotten a lot of questions is, hey, can I put my spouse on the payroll or my kids on the payroll to help soak up PPP money? And SBA came out in their FAQ guidance and basically said, well, it's in the loan forgiveness application. It's in the loan forgiveness application, actually. Is it in the FAQ guidance?
I don't know.
I don't know. SBA basically came back and said, you can't pay yourself, the owner, or your family members more than what you paid them in 2019.
So that solves the problem pretty easily.
Solves problems. So
No game in the system.
if your spouse was on the payroll for, say, 20 grand simply to get an extra retirement plan contribution, you can only use, on an annualized basis, 20 grand as their comp. So you would go, well, now 24 divided by 52 by 20 grand would be the max you could pay your spouse and so forth. But we keep saying this, we really don't think you're going to need to play those games because you're going to have plenty of payroll to soak up your PPP loan fund. So here on this slide, some key points out of the SBA FAQ guidance that's been issued since we last did this. It did confirm that hazard pay and bonuses are eligible for loan forgiveness, you know, certainly to employees. It reiterated the disparity between the treatment of medical and retirement benefits for owner employees, so forth, versus non-owner employees. Again, we don't think that's going to, the problem solved with the 24-week spending window. Borrowers will not be penalized if their FTE calculations for employees that reject, for those employees that reject their rehire offer. So if you, and we've had some of those, I've had a number of calls, hey, my hygienist doesn't want to come back. They're either pregnant or maybe older and in a high-risk group or have an underlying health condition, and so they're not coming back. So they've rejected your rehire offer. You won't be penalized for that. But look at the highlighted bullet point. You must notify ESD of such employees' rejection of your rehire offer within 30 days.
And in your letter to your employees, and if anyone wants a sample, I have samples, just email me, we'll get them out. Your letter to your employee, you say, and it's a part of the PPP loan, so it's a safe harbor there, you have to inform that employee that if you choose not to come back, it may impact your unemployment benefits. That has to be in the letter, and then that'll be part of your loan forgiveness application, that letter showing that that person's not choosing not to come back isn't going to ding your FTE.
Good point. Hey, Tyler, does the letter in the form of email communications suffice?
Absolutely. Email is fine. I've been absolutely astounded to learn how many people text with their employees. And so even text screenshots, if you can do that professionally, will suffice. It just needs to be in writing. On a spectrum, I would take an email over a text message, though, and I think it's worth it to jump on your Gmail and do it the right way, though.
There you go. So the point is the employee may lose their unemployment benefits due to their rejection, but having years of experience with ESD, I say may because I would venture to say probably not. I would say ESD would probably still grant them unemployment benefits, especially if they made a case of, COVID-related concerns.
Well, and they're probably not opening up mail either. So, and even if they did get the letter that you sent them, by the time they get it processed, the 39 weeks is probably going to be out.
Sure.
The one thing you need to thread a needle with how you're wording it with your employees. If they're not coming back for a pre-existing condition reason, or they're high risk under Governor Inslee's proclamation and that definition, so they're 65 or older, they have a pre-existing condition. If they're saying they're not coming back for that, you really need to thread the needle and be thoughtful on how you write this letter. If they're saying, I don't want to come back, you can give the letter, but under Washington law, you can't take any adverse action against an employee who is high risk right now. So you have to be really careful that you paper it that they're quitting and they've chosen not to come back, or rely on that safe harbor that Governor Inslee has put out. They're saying, I'm not coming back and I'm never coming back. Because you don't want it to be construed when it comes time for ESD to review the file of, hey, you kind of pushed them out the door. So being really thoughtful on how you talk to employees who are saying they don't want to come back on the merit for their own reasons is super important here.
It sounds like you have some templated language.
Yeah,
to work.
I'm kicking it out to everybody.
Good. Yeah, because you don't want any, employers don't want any lawsuit issues with their employees, like a claim of I was terminated for medical reasons or some other discriminatory reason. Good point. And the whole point here of documenting this rejection is because you really don't care if your employee continues on unemployment benefits. You kind of hope they do, but you don't want to be charged with that claim in your experience rating. And so I'm fairly confident if you go through this process, you'll be able to exclude the ongoing unemployment claim when it comes time for your experience rating that impacts your student tax rate adjustment. But I guarantee you where most practice owners are dropping the ball is that highlighted bullet point, the notification to ESD. SBA FAQ guidance continued here. They define full-time employment to mean working 40 hours or more per week, which for your typical dental office, that's a great definition. More words about what they provided about calculating FTEs. They clarified borrowers aren't double penalized for a reduction in FTEs and also a reduction in salary or hourly wage rates for that same employee that you're getting dinged on the FTE side. And they confirmed the free pass is measured on a single day, now December 31, 2020.
Which I think that the moral of the story is that most of the guidance that has come out is pretty borrower friendly.
Yeah, it's quite obvious Congress has bent over backwards with the intention of making these PPP loans for the most part, 100% forgivable.
Yeah.
Now because this goes into the point you were referring to earlier, why don't you pick up on the last bullet point here?
Let's see. Borrower's loan forgiveness will not be reduced if an employee is fired for cause, voluntarily resigns, or voluntarily requests a schedule reduction. So the point that I was alluding to earlier, the freight train size loophole number 900, it seems like, the law that was just passed includes a provision that basically says if you're able to document an inability to return to the same level of business as you were pre-COVID, the reduction in your FTE count won't come back to bite you. So there's probably going to be some additional debate on what this means, but same level appears as though if you could make it to only 98% of 2019's production, a 2% reduction is technically not a return to the same level. So we'll see.
The second bullet, sub-bullet point there is the exact wording out of the statute.
Oh, nice. Okay.
And it's, I don't know, that's pretty subjective.
It seems like it's opening up the door for the practices that are going to experience a significant reduction in production. And probably the larger application to this is going to be probably the non-medical dental space, the restaurants and the hotels.
Sure.
That's where this is really probably going to ultimately apply. But that's a pretty big
subject. The other FTE exemption, the first bullet point there is if you're unable, say you have a hygienist or a DA quit, there's some of them that are just refusing to come back. If you're unable to replace that equally skilled employee, you got to document it, then you get a free ride on that as well. You're able to exempt that headcount reduction in your FTE calculations. So
it's kind of a catch-all is really what it is.
Yeah, right.
For the companies that are going to be struggling, there appears to be a pretty big movement by Congress to say, essentially, do your absolute best to keep everybody that you can, but if business just isn't shaking out towards the end of the year and towards this period, as we all hope, there is some additional, essentially, rope, if you will, to make it so that you can still get close to, if not 100% forgiveness.
Sure. So going back to the SBA guidance that we issued, 14 days ago, the last bullet point there. So here's the link between SBA guidance and the PPP Flexibility Act that just got passed. The loan forgiveness will not be reduced if an employee is fired for cause or voluntarily resigns, or we've had some cases where employees have reduced a shorter work schedule because they want to just reduce their exposure, potential exposure in the office. So this was SBA guidance, and if you recall in our last webinar, we talked about how it originally came out. They talked about a de minimis exception for this. Well, the way it's come out now and in the loan application itself is no mention of de minimis. If you have 10 employees and you have 8 that voluntarily resign and you're unable to fill the position, then you don't get dinged for those 8. De minimis is however many, right? So just keep this in mind, and let's bounce back over to the PPP Flexibility Act that just passed. So they're kind of qualifying that, the voluntary resignations or the quits, those positions that are left open. First bullet, sub-bullet point there, you're unable to replace that equally skilled employee, using a good faith effort. That seems to be the requirement now. Is you're not going to get dinged for somebody that quits or doesn't come back, but you've got to make a good faith effort to replace that position or face getting dinged in your FTE haircut. except for the second bullet point, which Tyler was talking about. It seems to be fairly subjective and a little bit wide open.
A little bit of a catch-all, because it is subject to guidance that is issued by one of these other government entities. But I think you could probably make the argument that social distancing and, in Tyler, I'd be interested to hear your take on this as well, but the additional cleanliness and all of the different things that even the state of Washington that the governor has mandated, it seems like those things, if it impacts your business in a negative way, probably qualifies.
Well, and we were talking to the two doctors before we got going, saying DQAC has got a press conference or something coming up Friday that may impose, well, likely will impose kind of CDC guidelines in that regard that may negatively impact the production throughput. Actually, we've got a survey that's going to go out after this, asking some very general questions about, some production. Are your offices getting back to pre-COVID, or are you at 75%, 50%? And there's some questions in there about it. Is the new kind of COVID sterilization and social distancing slowing down your production throughput? By how much? 10%, 20%, and so forth. So it'll be interesting to see what kind of feedback we get back on that. So backing up one slide here, this, how do you get 417 and another 100 people to say yes? It's just fantastic.
I want to know who that one NAVO was.
Basically, it's Congress recognizing the challenges that borrowers are faced with being shut down, that it was making it so difficult to get all their PPP money spent in that 8-week spending round, so they blew it out to 24 weeks. And this may not be the last we're seeing with, government relief. This is maybe a good point to insert here. Through this process, we've been hearing from a number of practice owners is, hey, I got approved for an EIDL loan. Kind of forgot about those, because when you applied for your EIDL grant or your EIDL advance, that up to $10,000 advance number, that actually was the application also for an EIDL loan. And practice owners are just starting to get emails from SBA that basically says, hey, go set up your portal with SBA so that we can finish processing your EIDL loan. And those, I believe, have a max of $150,000. And so we're hearing varying amounts, $90,000, $140,000, $150,000. Those loans are available, and they have up to a 30-year payback at an interest rate of 3.75. We've had some practice owners ask, well, if I get this EIDL loan, can I use it to pay off this other loan that I'm paying a higher interest rate on? And the answer is no. Those EIDL loans have requirements to be spent on qualified expenditures as well. Two of which are prohibited is distributions to owners and refinancing other debt, or making capital improvements or buying new equipment. Basically ongoing operating expenses. But just to give you a heads up there, that's what those emails you're seeing are all about. Let's see here. We already talked about that. The rehire has been moved to December 31. We talked about kind of the wide open exception so you don't get dinged with your FTE calculations. The 75-25 has been moved to 60-40. We talked about that.
The big one being there, if you recall, prior to today, any amounts that ultimately weren't forgiven became a 2-year loan at 1%, effective as soon as the president signs this 70-10. It's going to be 5 years. So any amount that, in other words, the amortization, the payback period is going to be longer, making the payments smaller.
But bottom line, for the typical dental practice, if you don't get 100% of your loan forgiven, I'm going to say you're probably really bad at math.
Do it again.
Do it again, right. All right, that's it, folks.
Looks like we have some Q&A. So if you have any follow-up questions or you're looking to hire a new CPA or bookkeeper, feel free to reach out to myself. I'm kind of the point man for inbound dental practice leads, and we'll definitely help you out. And if you need any legal advice, reach out to Tyler Jones. Tim, do you want to take us through the Q&A?
Yeah, actually, what I thought is because Tyler Jones is, well, the expert on this stuff with you, I'll have him go through and I'll just kind of monitor. And if there's something I want to kick up to the top, we'll do that. So, Tyler, you can see your Q&A there, questions.
Yep. Okay, so.
Okay. Can I'll say one more thing because we've got 30, 40 questions, people. A lot of those are the same question over and over. If you can look through that list and upvote the questions that you want Tyler to and the rest of the panel to address, please do that. Otherwise, your question may not get answered.
Yeah. So what's the current strategy for having a PPP loan and an idle advancement? You know, I think it depends a little bit on if you got your idle loan before you got your PPP money. That's a very few set of people. Most people got their PPP money well in advance of their idle loan. But if you definitely are able to get both, you just need to make sure that for the idle loan, you're using it for certain qualified expenses. Do you guys have anything to add? I know it's on the first page of the PPP loan forgiveness.
I think the practice owners that are going for an idle loan have concerns about working capital and liquidity. And maybe in the short term, you know, there's fears of the return of COVID in the flu season in the fall, and will that lead to a second shutdown? Don't know. So some practice owners we are working with are going ahead and getting their idle loan and sitting on it, and you got to write it out 9, 12 months, and at that time make a decision to, you know, pay it back and be done with it. Can a practice owner apply for additional PPP funding? No, you got one shot at it.
Yeah, that's been a big question. A lot of people frustrated that they couldn't get their math correct, or, you know, whatever happened in the process and all that mayhem. There is no second bite at the apple. Once your E-Trans number is assigned, that's one and done.
There is one second bite of the apple for partners in a multi-owner practice.
There was some guidance that came out after people had already applied that kind of changed the rules a little bit, but I think that's going to be pretty limited circumstances.
Yeah, but if you were, you know, we have some practice owners that got shorted $20,000, $30,000, and if the bank screwed up the math exercise, unfortunately, there's no pathway to go back and fix it and get that 20, 30 grand that you should have got, you know, in addition to what you did get.
Sure. So can you still file for unemployment if you return back to work if you've not paid yourselves as W-2 or profits? You probably should talk to, well, I don't think that
you should get sized up for these.
Yeah. I was going to be nice, but you're going to end up having to check the self-employed box, and that's going to be fatal. You shouldn't apply if you're already working. Let's see. How does an EIDL advance affect your calculation of PPP forgiveness? To come out owing nothing, assuming you meet the requirements for total loan forgiveness, does this technically mean you have to pay the amount of the EIDL advance back to the SBA to avoid any payments and loan obligations? There's a lot there. If you got your EIDL money and your bank rolled your PPP loan so that you could pay off your EIDL, then yes, you need to follow the same forgiveness rules, but otherwise they're separate. You just have to follow the rules for PPP and follow the rules for EIDL. Is that fair, Brian and Tyler?
I think so. And looking at the forgiveness application, it does ask for your idle advance amount, you know, up to 10 grand and your idle application number. But in going through the form, I don't see where it factors into any of this.
Houses it up. So other than that one page where you put the 10 grand, it's just use the money for the qualified purposes. You should be okay.
Yeah, you didn't see where it gets added back or reduces the forgiveness amount either, did you, Tyler?
I did not see that.
Yeah, same here. So at the end of the day, your idle advance and your PPP loan are all 100% eligible for forgiveness, basically.
Is one of the calculations you need to turn in all those listed or just one of them? You know, for rent, I don't envision banks asking for copies of leases. They're just going to look for line items on your expense reports to show you were paying rent.
Although the forgiveness loan application does mention copies of your lease.
Oh, does it? All right.
Yeah.
Just
So
have them ready though. You don't have to submit them.
correct. So maybe this could be problematic for a self-rental situation where the practice owner owns the real estate in a separate entity and does not have a official lease agreement with themselves between the two entities.
So just use it on payroll. Don't even bother.
Yeah, Kevin makes a good point. With a 24-week spending window, very likely you'll use up all your PPP money just on payroll.
For the calculation of the FTE, what if we use all the money before 24 weeks, say in like 12 weeks? Can they use the time shot at the 12 weeks or will it be 24? I think Tyler answered this perfectly. I think it's just that last day of the 24 weeks, right?
Well, so I think that's still open for clarification, because I think we're going to have a bunch of dentists who within the next couple of weeks have already managed to spend all of their money. And the question is, do they really have to wait until the end of this 24 weeks in order to apply for forgiveness? And I'd say probably not.
No, I called a bank today to ask that question, and I won't name the bank because I don't want to get anyone fired. But they said you can apply, you don't have to wait. If you achieve forgiveness eligible numbers, you can get out.
Yeah, and the FTE calculation, so say you've spent your money and you can achieve 100% forgiveness in 12 weeks and don't have a haircut due to reduced FTEs, yeah, go ahead and file. But if you need potentially the
Safe harbor,
you got to wait till December 31st because that's the measuring date.
Yeah.
Now, it's my understanding that until you go through that forgiveness process, your PPP loan and the kind of accruing interest up to the forgiveness event is all subject to forgiveness. So if you wait till December 31,
you might get some additional interest forgiven, but I think for the average person, the nominal few $100s, especially at 1%, they'd rather just have it.
just get it done and over. Yeah, get it off the books.
Yeah.
Start the statute of limitations for audit, 6 years.
That's right.
Okay. Single member S corp considered an owner employee? Yes. What are you hearing about IRS? Latest on audits of PPP loans under 70 grand. I think you have a better shot of winning the lotto than getting audited under $2 million. There was a.
If you're audited and you get audited and you're under $2 million, you have the option of either A, giving the money back or immediately converting it to a loan, and your certifications that you made will be in good faith. I think if you're under $70,000, I think your chances are minimal.
Can we scroll up a little bit?
That is
And just
Okay,
a reminder, there's 45 questions here, people. So take a look at the questions that are being asked here and upvote them, because there is just no way we're going to get to all these questions tonight.
It's almost dinner time.
Oh, okay, Tyler, can you see those?
Yep. I received an EIDL loan, but have not gotten an advancement from SBA. Why? They're just slow. I would follow up with your banker or the SBA and see where they're at. But I've had a ton of clients say in the last week or so that they're finally getting pinged with push-throughs to open up their portal.
Well, the question there, Tyler, is it sounds like they didn't get their idle advance money.
Oh, Mr.
You know, if you didn't get your idle advance money, that was a bucket of money. It was first come, first serve. So I speculate you either didn't fill out the application correctly, and the two potential flaws is, one, you didn't check that box that said, I want to participate in the up to $10,000 advance on the last page. Or I've heard from some practice owners, they used a bank account that wasn't the business bank account. Maybe it was their personal bank account, so it didn't the names didn't match up. But if you haven't got your idle advance money by now, you're probably not going to get it.
Our practice has a safe harbor 401k obligation, so like a 3% match. Is that eligible payroll cost? The answer to that is yes.
Depends.
I thought it was.
So it depends. We've gotten this question a lot, is where practice owner says, hey, I've got my 2019 match, I still haven't paid. And if I pay it during the spending window, does that count? The answer to that is no. What does count is the match on the payroll during your spending window.
That's fair. Is the EIDL loan forgiveness application the same as the PPP loan? An EIDL loan is not forgiven, it's a loan, so there is no pathway to having the EIDL loan forgiven. There's the grants, which are a little different, but if it's a loan, it won't be forgiven. Is it 30 years?
Up to 30 years. I'm not sure how the payback period is determined, if it's borrower selected or if it's SBA mandated. Don't know.
Yeah. See, some of these are really specific.
That's a top question there, Tyler. That's pretty good. Why don't you read that one?
We've been having a different temporary dental hygienist every day after we reopened, and now one assistant is not coming back. With all these temp staff coming to work for us, will that affect our FTE? And do I have to write out all temp staff on the PPP forgiveness application Schedule A? Thank you. I think this might be a good question for Tyler Ock, since he.
Well, I think the short answer is yes, but I think it's also going to ultimately benefit you, because if you use the simplified method, you're going to get a 0.5 for each one of them. So this might indirectly be a nice boon.
Well, so I'll point out one bear trap, because some temp employees are paid through temp agencies. If you want to take advantage of this, you got to pay them through your W-2 payroll.
Not a 1099.
Not a check to the temp agency.
The other thing is, with respect to any assistant who's just not coming back, if you paper it correctly with, if they're not coming back for personal reasons or whatever, you can paper that and you'll get a cleansing for the FTE count on that one who chose not to come back.
That's our understanding. Yep.
How do sole proprietors document payroll? 2019 Schedule C sufficient?
What I'm speculating the question there is how they document their own payroll, not their employees' payroll. And everything we've seen is that the SBA is using the 2019 Schedule C as the calculator for what they're calling the wage replacement for self-employeds.
All right.
So yes, 2019 Schedule C is going to dictate the owner's compensation that factors into the forgiveness calculations.
Besides the obvious electric, gas, what else can be categorized as utilities? I think if you go back to one of our previous presentations, we did a big list, cable, waste management. There's a colorable argument that cell phones do, but I guess I would echo that now that we're 24 weeks, you don't really even need it.
Garbage is not in there. It's electric, gas, water, telephone, cell, and the internet, I believe. And then there's one in there called transportation, which we can't figure out how transportation factors into being a utility.
Well, it's the gas for the fleet vehicles is what it defines.
Is that what it is?
Yeah, it's fuel.
So for our office, that's a moot point.
if none of your employees are working a full 40 hours, then full 100% forgiveness is not possible, correct? That's not true. You can still get it all forgiven.
Correct. Yeah, for all those employees that are under 40 hours a week, they only count as 0.5, a 0.5 FTE in all the calculations.
It's
So,
about parity between your base period that you select for your application for forgiveness and your covered period. It's not necessary, you don't need to ramp up, it's just parity between the two periods.
correct.
I got a PP loan for my employees only. Can I get another one for myself as a self-employed dentist? No, it's just one and done. The only exception would be is if you're a partner in a multi-practice office, but it doesn't sound like that's the case. I am likely to retire within the next 18 months. I have a C Corp. Will I be held personally responsible for the increased SUNA taxes? As long as you're paying them as they accrue, once you sell, the purchase of your practice will inherit your experience rating, and that'll be dealt with by the purchaser.
Yeah, they'll send you a thank you card for that little gem.
To them out the door. We have 14 employees and 2 did not return because they are pregnant and their OBGYNs are not clearing them for work. We have doctor's notes and rehire documents that everyone else has signed. Do they get removed from the FTE and overall payback calculations? Give me a call. We can talk through that one. That's a little sensitive, and we should probably talk on one-on-one on that one.
Yeah, the key there is good documentation or proper documentation, but I'm going to say yes, those 2 that didn't come back in that scenario will not ding you for your PPP, although recall in the PPP Flexibility Act that just passed, it talked about making a good faith effort to replace those positions. So it could not.
You guys want to keep going? Dr. Hess, you tell us.
Let's give it a few more minutes, guys, and not go past 7:30, okay?
Deal.
Does that
Okay.
sound good? Yeah. So again, please take a look at that Q&A and upvote questions that you want to see the answers to, so we can get to the most important questions for everyone out there.
So the question up here is about hiring a family member and paying them more than what they were paid in 2019. That's not going to help you. You're going to be limited to comparable pay rates in 2019. But like we've said many times, with the expanded spending window to 24 weeks, don't think you're going to have a problem, even if you have to calculate that lower pay amount for that family member.
Yep.
There was one, how to get Tyler's template for employees not returning.
Right there.
Yeah.
Give me an
Reach
email.
out to Tyler.
I'm a single member S Corp, but I myself am also my own employee and give myself a W-2. Can I consider myself an employee? Of course. Well, you're an owner employee. You're not considered an employee for these PPP calculations. You're an owner employee.
What happens if I calculated the FTE wrong in the application? My staff all came back, but since we don't have work 40 hours a week, it will be adjusted. When I initially asked my bank, they said anyone who works over 20 hours per month, they will be counted as FTE. I think they probably meant it's definitely not 20 hours per month.
What you put in your PPP loan application has no bearing on the loan forgiveness application. Just tell your banker to go, get smart or something. They told you wrong.
There's a new website called Google. Check it out. If all of the employees in a sub S Corp have worked the same hours for years, but under 30 hours, they have been considered full-time by the sub S. Is that still full-time? I don't think really that's the issue. I think the issue is parity between the hours that the employees were working during your base period that you select and parity during the covered period as you fill out the application. Is that fair, you guys?
Actually, Tyler is going to the simplified method. if you have an employee that worked, say, 32 hours pre-COVID and now is only working 20 hours, you get a 0.5 compared to a 0.5, so you're even. The rules are really, really favorable and flexible.
Yeah. We are paying our employees first of every month. Should we change to bi-weekly payroll now?
No.
No. Don't hurt yourself. With a 24-week spending window, you're going to be good. See, think about it. Your PPP loan was based on 2.5 months of payroll, or 10 weeks. You have 24 weeks to spend it, and you have another bucket of 40% for rent and utilities. So even if you were closed for 8 weeks, you have 16 weeks to spend 10 weeks worth of money. You're going to be okay.
Do you have a template to email an employee who's refusing to come back work? I do have some templates, though it depends on why they're refusing to come back to work. What if your office is closed on December 31st? You're still okay. You could.
The issue is, are they on the payroll by December 31? So, it's basically that last payroll cycle that straddles December 31.
I applied for PPP funds through Cabbage. I received more funds than I wanted, but was unable to communicate with Cabbage via phone or email. Can I just send back what I don't use?
Just send that money to me. Why are you saying
send it my way?
Yeah.
You can, or you can renew your WAGD membership for next year.
Exactly.
It's curious. You receive more money than you wanted. Well, it's based on 2.5 months of your payroll, so that'd be the max that you could have received. Whether you want it or not, this money is going to end up forgivable. So why would you send it back?
Yeah.
That's what I say. Send Dr. Hess or me or AGD or someone. Yeah.
Absolutely.
My assistant didn't come back and I'm having difficulty finding a replacement. Will PPP forgiveness include the staffing agency fee, which includes their service fee and the payroll they require? So your PPP forgiveness won't give credit if you're cutting a check to a headhunting agency to bring in your temp. However, if the assistant isn't coming back, depending on the reason why they aren't coming back, you may be able to scrub that assistant from your calculation altogether, and it kind of becomes a moot point.
Yeah, if you want any money counted as payroll cost for PPP forgiveness, it's got to be run through your W-2 payroll.
It's a bunch of S Corp. Don't you think as owner, yeah, that's God. What are you hearing about the IRS taxing us on the PPP money as income? Are we going to get hit with taxes on this money on the back end? As of right now, the PPP money is not taxable and it's not COD, cancellation of debt income, when it's forgiven. However, the IRS gave us a notice at the end of either last month or April that said you won't get deductions for the costs you pay with your PPP money. Do I have that right, Brian?
Yes.
So there is some debate, though, both in the Senate and Congress, though, because the original statute explicitly said that it was supposed to be non-taxable, and by disallowing the deductions for the spending of the money, it effectively becomes taxable in a roundabout way. And so there's a bunch of senators on both sides, actually, as well, left and right, that have basically said that they're going to try and do something congressionally to have that fixed, and they view it as an overstep by the Treasury and the SBA making that proclamation. But we'll see what happens.
Yeah, actually, if I remember correctly, when shortly after the IRS came out with their notice disallowing the deduction of those expenses, in the Senate, I don't know who sponsored the bill. I think it was a Republican and a Democrat, so both sides of the aisle sponsored I think it was referred to as a PPP technical corrections, which essentially reversed that. But I haven't seen that go anywhere yet.
Yeah, me either.
Are 501c6s eligible for the PPP loan? No, they're not. Sorry, AGD. We have one employee who's not come back due to children's school closure. must the employee be classified as refusing to come back? You need to be careful there in terms of the Family First Coronavirus Response Act and some other issues. So I don't know that I would say that they're refusing to come back to work. I don't think you need to deal with that separately.
We've had a couple practices have employees come back like the first week or the last couple of weeks, only to then have an employee out because their brother-in-law was exposed to a coworker who proved positive for COVID, and the brother-in-law came to visit and, you know, spent the weekend at their house, and so they were potentially exposed. And so, you know, there's situations like that, or a sick family member where like Tyler, you mentioned, the Families First Corona Response Act, the emergency sick leave rules. Once they're back on the payroll and you have that employer-employee relationship, then the Families First Act kicks in, correct?
Families First Act kicks in, and then you need to see if you apply for either one of the exemptions or if you can qualify for the healthcare provider exemption. You should talk to either your HR person or your attorney or CPA about that.
But it does expose the practice to up to 80 hours of pay for that employee who's out under that act. But the good news is the practice owner gets 100% payroll tax credit for the money they pay out under that. So you're just playing bank, you know, money out, money back in.
I think
It's time for one
more.
Yep.
Yep.
I applied for my application for PPP, but I forgot my salary. I already received the PPP loan. Is it too late to amend and ask for more money? Unfortunately, it is, but you can always go and apply for an EIDL loan.
All right, guys. We said we'd take it to 7:30 there. So I want to thank Tyler Jones, Tyler Opp, Kevin Bray, and Brian Bray. Thanks once again, guys, for putting this webinar together. Just a reminder to everybody out there, if there was some details on the slides that you wanted to see again, this webinar will be up on YouTube probably in the next 4 or 5 hours, depending on how long it takes us to transcode and upload to YouTube. At YouTube, that channel is Washington Academy of General Dentistry. I'll put up a slideshow here for you. So anybody that needs the Dental Accounting Pros and Benton Bray's information or Tyler Jones' information at Helsell Fetterman, please take a screenshot there or get those numbers down. I'll leave those up for a second longer. And then we'll just finish up with our thank you slides for the Washington Academy of General Dentistry. Gentlemen, thank you very much. We appreciate it. And again, you are taking on new clients, correct?
Always.
Correct.
All right. Thank you very much. All right. I'm going to take over the screen here. And
Perfect. See you guys.
Thank you.
thank you. Just a quick reminder, this has been the Washington Academy of General Dentistry Stay Home, Stay Healthy CE series. This is number 58 in our CE series. If you missed a previous webinar, you can see that at our YouTube channel. To navigate to that YouTube channel, you can always go through the washingtonagd.org and just click on that YouTube link. For those of you that are interested in CE credits, your CE credits will be coming from the University of Washington School of Dentistry CE department. They will not be coming from the Washington Academy of General Dentistry. You'll be receiving a PDF with your CE credits for tonight's presentation. That'll be a 90 minutes of CE. Just a reminder, save that email with that PDF. just in case you need it for future reference. If you're an Academy of General Dentistry member, we will be reporting your CE credits directly to the Academy of General Dentistry, and those will appear on your transcript probably in 2 to 3 weeks' time. We'd like to thank all our sponsors, including the International Brotherhood of Electrical Workers, Local 77. Thank you for your great support to our Washington Academy of General Dentistry Educational Center during this COVID-19 pandemic. We appreciate all you've done in regards to rent, and we look forward to being long-term tenants there. For those of you that are not familiar with the Washington Academy of General Dentistry Educational Center, we offer hands-on courses. We have a conference room where we can seat probably 120 people for different lectures. We can do hands-on with handpieces, etc., for probably 60, and then we also have 5 working operatories. We offer a master track program that is 4 sessions with 28 hours per session. We've rolled back the tuition on that, and that new master track program starts up in the fall. We've got a great lineup of speakers. Many of those speakers have appeared on these webinars, so we're looking forward to having those friends back with us in the fall. We also will continue to do webinars as subjects arise. I know there's a lot of webinars out there right now. We're restructuring our website, so you'll be able to have on-demand CE in the future as well, and we're going to try and keep the fees on those courses as low as possible. Just a reminder also that Dr. Yassine's implant continuum will be continuing as we are able to get back up and running at the educational center. This is a hands-on implantology course from A to Z. Please use that QR code when it comes around again, or go to washingtonagd.org to see the opportunity that's available there. We also offer an orthodontics continuum with Dr. Tran, and there's many, many opportunities for other CE events. We always welcome our student members of the Academy of General Dentistry, especially the UW student chapter, with discounted tuition on many of those courses. Finally, let's just thank Comet USA, Patterson Dental, the Canadian Academy of Restorative Dentistry and Prosthodontics, Arkansas Academy of General Dentistry, Montana Academy of General Dentistry, Idaho Academy of General Dentistry, Alaska Academy of General Dentistry. Thank you for your support with our upcoming endeavors in online CE. We appreciate it. I would like to thank our Executive Director, Valerie Bartoli, and our panelist, Dr. Gary Hayamoto, for helping run these webinars. This has been the Washington Academy of General Dentistry Stay Home, Stay Healthy CE series. We look forward to seeing you in the future. Thank you, Valerie. Thank you, Dr. Hayamoto.
Thank you, Dr. Haas.
All right.